Welcome back to another video lecture of Financial Market and Instrument. You are watching our YouTube channel, Even College Digital Classes. In our previous class, we had discussed about the insurance sector, and we know that there is a risk management tool, that is insurance, which is going to give us protection against some unforeseen dangers or unforeseen risks. So there are parties who is giving the insurance, or we are saying them as the insurance sector, or the name that is given to them is the insurer. And there are people, those who are prone to risk or those who are having some risk and they are getting themselves protected, and they are the insured. So these two parties are going into some contract, that is the insurance contract, and they have a contract of giving protection and being protected from some danger or some unforeseen risks. So this is what insurance is, what we have discussed in our last class, and also we have discussed about the criticalities of the insurance and various other factors about the insurance. So in today's class, we will be discussing that what is the objective behind this insurance and some other facts about insurance. So without much delay, let's start off our today's class. So insurance, as we know, is a contractual agreement between two parties in which one party promises to protect another party from uncertainties and the losses. And insurance is a means of protection from any unforeseen losses and contingencies. So it is a risk management technique used for hedging against various uncertain losses which we are saying. So insurance is a risk management tool or risk management technique. And the first party in insurance company or insurer, what we are saying, who agrees to protect and compensate the other party for losses which will be suffered by the other party, who is the insured. And the another one, as we have said, is the insured or insurance policy holder, who gets protection under insurance policy in return for a premium which he is required to pay regularly to the insurer. So the agreement that will be there between the insurer and the insured, that will on the basis of a certain commitment of money, or what we are saying in insurance term, that is the premium which will be given by the insured. So by taking insurance policy, different insurance policy holders pool their interest together. So as we have said that insurance is going to protect a particular type of risk which is there for a group of people. So that group of people, or the people those who are having that particular risk, they are coming together and holding the policies, and they are going to pool the risk that is there with them. And the loss suffered by any of the insured is paid out of that premium amount paid by these policy holders to insurance company. So this is how it is going to work. And insurance is an effective tool to avoid losses by transferring or sharing it with other individuals, and it boosts confidence level of peoples and acts as supporting pillar by compensating them at time of emergencies. So this is what we know is insurance. So insurance is an agreement, it is a risk management technique or tool, what we are saying, and it is going to protect the particular group of people, those who are having the risk of a particular or certain risk, what we are saying. So they are coming together, they are pulling the risk, that the certain risk that is there with them, and they all are contributing the premium. And if that particular risk or that certain loss is actually happening to someone, then the insurance company is going to compensate that from the premium amount that is there. So that is what insurance is, and this is an important device or tool in the financial market, as we have said. So now how this insurance is working, let's have a look. So if we'll see that there are generally 3 steps in insurance process, and what we are doing, that firstly we are selecting the insurance policy as per our needs, or as per the need of the risk we are selecting the insurance policy. Then we need to pay the premium amount regularly, that is the second step or the second process of having an insurance policy. And at last we are going to claim our insured amount with the help of supporting document in case of any unfortunate event occurs. So this is how the insurance is going to work. There are 3 steps. First, we have to identify that what risk we are prone to, or according to the risk that we are having, we are taking the policy. Then secondly, what is important or necessary to have the insurance is that we are going to give the premium regularly. So that is the second step. And thirdly, if we are facing that risk, or we are having that loss that we are getting secured, we are going to claim it with the supportive documents that is required by the insurance policy, or according to the terms and condition of the insurance policy we are going to put the claim. So this is how the insurance works, as simple as that. So this insurance is not only made for the protection of the risk or risk management or pooling of risk, that is also giving economic development, or that is going to boost the economic development. So this insurance helps in economic development of country by mobilizing people's saving, by attracting them for invest in insurance policies. So insurance, we cannot say that it is just a risk management tool. This is also a financial instrument which is going to mobilize the people's saving and attract the investors to invest in these insurance policies, as it is going to secure them, or it is going to give them protection against the risk. And these insurance companies reinvest these collected amount in different investment avenues for earning profit. So this is how it is a part of financial market, and it is going to boost the economic development. Now we will move towards and see that what is the objective of this insurance. And if we will see, there are 6 objectives of this insurance, that is granting security to people, minimization of losses, diversifying the risk, reduces the anxiety and fear, mobilizes the saving, and it also generates capital. So these are the 6 objectives of insurances. So let's have a look and discuss this objective of insurance in detail. First is granting security to people. So if you see, insurance primarily serves the purpose of granting security against losses and damages to people, and it is an agreement enters into by 2 parties, that is the insurer and the insured, in which one promises to protect other from losses in return for premium paid by the other party, or what we are saying, the insured. And one party is insurance company and the other one is insured, as we have said, and the insurance companies guarantee the insured of compensation in case of any unfavorable contingency. So insured needs to pay premium to insurance companies in a return for guarantee of compensation, we can say. So this is what guaranteeing security to people is. So guaranteeing security to people means what? This is the objective of insurance, that the insurance is giving guarantee to the people that it is going to cover their risk, or it is going to compensate the loss that they are going to incur if any damage or loss is happening to them. So this is the first and foremost objective of insurances. The second objective of insurance is it minimize the losses. So insurance aims at minimization of losses, as we have know till now, that it arising from the future risk and uncertainty, the loss that is going to arise from future risk and uncertainties, insurance is aiming at minimizing those. And it adds certainty of payments to people for happening of uncertain events. And insurance assures the individuals for compensation of those losses, and it minimizes the risk through proper planning and administration. So, insurance companies suggest people for taking safety measures like installation of fire detection devices, alarm and camera system, etc., which are the safety measures which the companies suggest that the people should have, which will also minimize the happening of the damage or the happening of the risk. And they also join hands with various organizations like the fire brigade, health, and various organizations which work for reducing losses and damages. So, this is what the objective of insurance is, that it minimizes the losses. And this way insurance works towards minimizing the happening of various losses. So, if we will proceed to the next objective of insurance, it is diversifying the risk. So, insurance, we already know that it works towards diversifying the risk among large number of people, those who are having the same type of risk, and it aims at reducing the adverse effects of any future contingency by spreading the overall risk associated with it. And it is the medium through which people share their risk with others, those who are having the same type of risk. And the insurance companies compensate the insured for losses out of premium they charged from their different policy holders. And the loss incurred by a single individual is diversified among large peoples by insurance companies by utilizing the collected premium amount for paying compensations. So, this is what is the next objective, as we have discussed, that it is going to diversify the risk. If you are having a particular risk, per se you are having a vehicle or you are having a motorbike and you have a risk of having an accident while you are driving on the road. So, all the vehicles or all the riders, those who are on the road, are having the same type of risk. So, all of you are going to the insurance company and making your vehicle secure with the automobile insurance policy. So, if some mishappen or if some accident is met by some vehicle owner or some rider, then the insurance company is going to compensate them with the premium that it is collecting from all the insurance holders. It might happen that you might not meet with an accident, but that risk is shared by others, or you are going to be a part of sharing the risk of someone which meet with the risk that you have been protected with. So, this is what this is how we can say the risk has been diversified. So, next objective is the reduces the anxiety and fear. If we see that these insurance policies relieves the individuals of any tension and fear regarding the future's risk and uncertainty. So, definitely risk is something which is very much associated with anxiety and fear. So, while we are getting ourselves insured, we are relieved of that anxiety and fear of getting or meeting with that particular risk in the future. So, it guarantees them of compensation in occurrence of any unfavorable contingencies, and assurance of compensation is the most relieving factor for tensed and worried people, and they are certain of payment on occurrence of various uncertain events, and it makes them confident and they focus on their activities with full attention. So, not only this insurance is giving financial security or financial assistance, we can say, it is also reducing the anxiety and fear that is there with the people. So, when you are having anxiety and fear, it is difficult to focus on something or focus on your activity. So, while you are being secure or while you are assured that you will be compensated of the loss that you are going to procure. So it will be easy, or it will be tension free, we can say, or there will be not so stressed situation. So this is also an objective of insurance, is that it is reducing the anxiety and the fear of the people, those who are holding an insurance policy. Next is mobilizes the savings. Insurance is mobilizing the saving. Mobilization of saving is another important objective of insurance, as we have said, and it attracts people for investments by presenting them with numerous insurance policies guaranteeing of compensation for losses, and large number of people takes this insurance policy in order to insure them against losses and damages. So insurance companies are able to generate large amount of funds in the form of premium that they charge from their policy holders regularly, and these funds are then invested by these insurance companies into securities and stock in market and earn incomes. And idle lying resources with public are employed by insurance companies towards income generating sources. So this is how the insurance company is also having an objective of mobilizing the idle money that is there in the financial market and make it useful or make it productive and generating fund out of this idle money. Another important objective of insurance is generation of capital. So insurance companies leads to capital generation by collecting large amount of funds from the public. So as we have discussed in our last point, that the insurance companies are mobilizing the savings of the people, or they are making the idle money work. So this insurance company definitely leads to the capital generation, and they regularly charges premium from their large customers for providing them protection against these losses, and these funds are invested for industrial development by subscribing to shares of companies. So these funds, those that are collected from the customers, are been invested for the development of the industrial sectors, or we can say for subscribing to shares of companies. By that, it is also becoming a part of that industry, and it is generating capital. So companies are able to get their required capital through insurance industry, as these investments in companies for earning dividends and other incomes. And this boosts the industry performance and economic growth of the country. Also, bigger investments lead to creation of various employment opportunity. So this is what the objective of insurance is. So this is what insurance is, what we have revised, or we have a brief look on what insurance is and what is the objective behind this insurance is. So insurance is definitely giving protection against risk. It is minimizing our losses. It is not only minimizing the losses, so giving protection to the people, those who are prone to risk or those who are facing risk. It is also an avenue for investment, and it is also helping in the development of economy by pulling the money of the peoples, or it is mobilizing the saving, as we have said. It is also generating capital by investing those money in the industrial sectors or development sectors, and by putting this money in the share markets, or getting the shares of different industries and putting the money there and generating also capital. So in this way, we can say that insurance is not only a risk management tool, but it is an important instrument of financial market. So this is what insurance is and the objective of insurance is. Now, what is the function of this insurance? Let's have a look at how this insurance is working. So what is the function of insurance is? So if we see the functions of insurance, it provides protection, it is sharing the risk, it provides certainty, it improves the efficiency, and it promotes economic development. So these are the functions of insurance. Let's have a look on these functions of insurance. First is provides protection. So the primary function of insurance, as we have know till now, that is to provide protection to insured in case of any uncertain event, and the insurance guarantees the person to protect him from sufferings in case of damages and losses. So insurance policies help a person to recover back to its original position after incurring losses by compensating them. Second function, if we will see, that it is a sharing of risk. The insurance is a means of pooling risk of one person among a large number of persons, and compensation for losses suffered by one individual is paid out of premium paid by different policy holders. By this, it is going to share the risk, and this risk is diversified and shared among different persons, those who are having the same policies. And it reduces the adverse effect of uncertain events on only one person by sharing of risk. That is what sharing of risk is. And the next function is it provides a certainty. So if we see, happenings of unexpected events is uncertain and cannot be determined. So the uncertainties of these events can be minimized through proper planning and administration. So this insurance is helping in adding certainty to these uncertain events, and it assures businessmen of certain payments on happening of unexpected events. So it relieves them from large damages and losses. So insurance is providing, or it provides, a reliability and certainty of payments to the businessman. This is another important function, that is providing certainty, which is very important. And if we will see, the next function of insurance is it improves the efficiency, and the insurance has an effective role in improving the efficiency of the business by providing the guarantee of compensation in case of any mishaps, and it relieves the businessmen of worries and tension of risk, and it boosts their confidence level, and they work with full attention towards their roles. So insurance reduces the miseries and concern for losses or damages. So this leads to better productivity of the organization, thereby increasing the overall efficiency. So as it is giving the protection, or it is giving the certainty of the payment, or certainty of the recovery, so it is also improving the efficiency, and it also prevent from the losses that is going to happen. So insurance act as a cover against the losses, we can say, and it guides businesses in taking appropriate corrective measures for reducing damages and losses. So it suggests them for observing safety measures like installation of automatic fire detection devices, alarm systems, etc. And insurance companies join hands with institutions which help in avoiding losses like fire brigade, health organizations and other institutions. So it will help in reducing losses, which will ensure lower payment of compensation to insured. So this will also enable the insurer in reducing the amount of premium and will motivate more savings. So this is what is the function of insurance, we can say. And lastly, it is not only giving protection, or it is not only going to give compensation, it is not going to give relief from fear and anxiety, it is also functioning to promote the economic development. So insurance promotes the economic development of the country, and it leads to generation of large amount of funds by insurance companies through the premium collected by them from the insured, and it utilizes the idle lying money with people by attracting them for investment in various investment policies, and all this collected money by insurance companies is invested in shares of various companies and other investment avenues for earning profit, and this leads to industrial development in the country, thereby accelerating the rate of economic growth. So these are what the functions of insurance is, or this is how insurance is functioning not only for the protection of the people or for the coverage of losses or risk, it is also adding to the economic growth or helping in boosting the economic development of the country. So, this is what the objective and the function of insurance is. In our further classes, we are going to read some more facts about the financial market and instrument. For today, this is all. Thank you.